Good day to you all. We are meeting again through Tax Talk YouTube channel of Ranavira Associates to discuss Inland Revenue Amendment Bill of 11th October 2022. This particular bill is issued, that is gazetted on 11th October 2022. Then it is approved by the cabinet and order paper is filed on 19th October 2022. As per the constitution of the country, the public objection period ends up by 26th October 2022. That means now if there's any public objections on or before 26th October, we have to make those public objections at the Supreme Court. Right. Then if there are any public objection, Supreme Court has to give the determination within 21 days. After receiving that determination, Parliament can pass this particular act subject to those improvements and also the improvements at Parliament committee level. Therefore, most probably there will be objections at the Supreme Court. Therefore, latter part of November, the Parliament will be able to pass this act in the Parliament. Now, first we'll see why a tax reform is needed. There are three main issues in Sri Lanka. One is the lack of foreign exchange with the country. Then the second thing, government is suffering with heavy financial difficulty, that is mainly rupee shortage. Then the third thing, the country's gross domestic production has come down materially. Therefore, we need to improve the country's gross production improvement. Now, aiming for these three requirements, the government, as one step, government proposed this Inland Revenue Act amendments. Now we have to see whether the proposed tax reforms will meet the above expectation. For that, we will go through these things, the things what they have proposed in text. Now, for your easy reference, I have divided into some chapters. I'll be talking on individuals separately, then corporate income tax separately, then the withholding tax, then little bit about income tax administration and other matters. If we'll start with individuals. Now, first we'll see what are the changes they have proposed. They propose to have these changes mainly with effect from 1st of October 2022. But with this delay, most probably some of these things may not be in a position to backdate to 1st of October 2022. Now, what are the changes? The tax-free personal allowance will be reduced from 3 million rupees to 1.2 million a year. Then the tax slabs will reduce. Earlier slabs were 3 million each slabs. Now they are proposing to reduce it to 500,000 each. Then standard tax rates. Earlier, at present, we have 6%, 12% and 18%. This will be changed to 6, 12, 18, 24, 30 and 36%. Ultimately, the highest tax rate of 18% at present will go up to 36%. Then expenditure relief of 1.2 million. At present, individuals are getting an expenditure relief that will be removed fully. Then the tax-free interest allowance. Now in May this year, the Prime Minister at that time announced that they are considering to grant this senior citizens by interest allowance, interest exemptions relief to reintroduce it. But it hasn't happened in the bill. Then Income tax exemption on gold, gem and jewelry export businesses will be fully abolished, but with effect from 1st April 2013. Then, income tax exemptions on IT and enabled services to local market will be fully abolished with effect from 1st April 2023. However, the export IT and enabled service export income will be continued to be exempted from tax under service export category. Right. Now, the 15% mandatory withholding tax will be introduced on dividends. That will be a final withholding tax. Therefore, once the company deduct 15% withholding tax, there won't be any further tax on that. Then a 5% mandatory withholding tax will be introduced on interest income, but that will not be a final withholding tax. That means even you paid 5% at the source, depending on your total income, you may have to pay further taxes, might go even up to 36%. Then the maximum income tax rate, there was a maximum income tax rate of 14% on gem and jewelry, local market sales of gem and jewelry, and the supply of electricity to the national grid. That will be abolished with effect from 1st October 2022. However, this liquor, tobacco, gambling and lottery business, there's a higher tax rate of 40% that will continue. At the same time, the individual's investment capital gains will continue to be taxed at 10%. That 10% rate will continue. Now, with these changes, if these are effective from 1st October 2022, we have to wait for the law. After passing the law, if they'll backdate it to 1st October 2022, what will happen? In the year of assessment 2022-23, first 6 months we have to calculate the tax on the existing basis, and the balance 6 months we have to calculate according to the new basis. That means it is on proportionate basis. Now, we'll see what are the things which are not important, things which are not changed in the case of individual. That is also important. Now, these exemptions, these listed exemptions are not removed. We'll see what are the exemptions not removed in the case of individuals. Compensation and gratuity, the capital portion, what you are receiving as a result of employment, personal injuries and death. Then government pension, employees retirement benefit receiving from income portion of pension fund, income portion, that is the interest or whatever the gain, or of ETF. The Commissioner General's approved provident fund. There, the both capital and interest both will be continue to be exempted. Then the government servants road vehicle permit benefit is continued to be exempted. The amounts derived by senior citizens on life annuities exceeding 10 years. If the life annuity period is exceeding 10 years, you get the exemption. Those senior citizens exemption will continue. Then sale proceed of gems, where you have paid the 2.5% withholding tax at National Gem and Jewelry Authority auction. Then there won't be any further tax on that because this is a final tax. That will continue. Then services rendered in, these 2 points are very important. The services rendered in or outside Sri Lanka to be utilized outside Sri Lanka, and where the proceeds are brought to Sri Lanka through a bank. It should be utilized outside Sri Lanka. If it is the situation, that is continued to be tax exempted in Sri Lanka. Then the next one, any foreign income. Earlier one, only the services. This is any foreign income earned or derived in foreign currency and brings to Sri Lanka through a bank that continue to be exempted in Sri Lanka. Then the interest income on foreign currency deposits will be continued to be exempted. Now we will see what are the tax rates, the prevailing tax rates. As per the prevailing law, out of the taxable income, that means personal allowance 3 million. After deducting the personal allowance of 3 million and also employ the expenditure relief of 1.2 million and other reliefs and qualifying payment, we get the taxable income. Out of the taxable income, first 3 million taxing at 6%, next 3 million at 12%, then the balance anything exceeding 6 million at 18%. Therefore, at 6 million level, at present we are paying 6 million not taxable income level, we are paying 540,000 income tax. We are paying 540,000 income tax. Now we will see what is the proposal. This is the proposal. Out of the taxable income, first 500,000 at 6%, next 500,000 12%, next 18, 24, 30, 36. Right. Then anything exceeding 2.5 million, the excess of 2.5 million, we have to pay 36% income tax rate. Now we'll compare these things and see. That is very much important. Now these days, majority of the employees who are getting more than 100,000 rupees per month are very much concerned on these proposed taxes. Therefore, we will see how it is affecting. Application of personal allowance and standard IT rates. The income tax computation after, I have done this after considering the expenditure relief of 1.2 million. Because each individual who has obtained the professional advice on taxation may be enjoying this 1.2 million. Assuming that they are enjoying 1.2 million, I have done this computation. Now the total income. If your total income is 4.2 million, that is 350,000 a month, at present you are not paying any income tax, because 3 million exemption, next 1.2 million expenditure relief is there, then up to 4.2 million no tax at present. But in future, you have to pay 630,000. Then at this level, 400,000 rupee monthly income level, your current tax 36,000, it is increased into 846,000. Then at 450,000 monthly income level, currently you are paying 72,000, it will go up to 1,062,000. Likewise, at 600,000 level, currently you are paying 180,000, in future you have to pay 1,710,000. Now we will see the increase. Now per annum, at this last level, the 600,000, you are paying additional income tax of 1,530,000 per annum. That is 127,500 rupees per month. Now see, out of your 600,000 income, 600,000 income, you have to pay a fairly big amount of tax. Right. Then what will be your take-home salary? You have to think whether you are in a position to manage your day-to-day life or not. I'm sure that majority of you all may not be in a position to manage your personal living expenses. Saying that, I would like to move to the companies with effect from 1st April 2022. Now this is also somewhat a comparison for easy understanding. At present for companies, SMEs paying 14%, in future it will be 30%. Then the export of goods at present you are paying 14%, in future it will be 30%. Then there are some specified undertaking. This is mainly the services which relate to international trading. At present you are paying 14%, in future 30%. Then education, promotion of tourism, construction services, agro processing and healthcare. At present we are paying 14%, in future it will be 30%. Then dividends received, at present we are paying 14% fine, 14% maximum tax. That will be freeze to 15% tax. Then supply of health protective equipment by these export-oriented BOI companies, if they are supplying those things to the Ministry of Health or to the forces or to COVID centers or to police, then at present they are paying 14%. In future, they have to pay 30%. Right. Now we'll continue. At present, the gain and profit from local market of gem and jewelry, you are paying only 14%. In future, whether local market or export market, it will be 30%. Then year of assessment 2000, and this is affecting to the companies listed during 2021. The government promised, as per the existing law, if a company listed in stock exchange during the year 2021, they are getting 3 years concessionary tax rate of 4 years. 3 years are the 22, 23, 23, 24 and 24, 25. On this understanding of the law, 14 companies are listed, 14 companies listed during this year. Now all these 14 companies will be losing this 14% concessionary tax rate what the government promised at. They may have to pay either 30% or 40% depending on your business. If it is liquor, tobacco, gambling, lotteries, 40%. Then supply of electricity generated by renewable energy. Now at present the tax rate is 14%, that will go up to 30%. Then the manufacturing sector 18% will go up to 30%. Then conducting betting and gaming and liquor and tobacco continue to be 40%. Then on investment capital gain of a company, at present the tax rate is 10%, that will go up to 30%. By doing this, the capital market will get scaled down, because a lot of people who are having, lot of companies who are having unproductive assets will not be disposing because of this heavy tax rate. Then on any other taxable income, at present the standard rate is 24%. That standard rate will go up to 30%. Then I have explained what are the specified undertakings. These are basically something to do with the international trading services with relate to international trading. Then how to apply these change in rates for two different periods of the year of assessment 2022-23. If these are backdated to 1st of October 2022, if they'll backdate, what will happen? Then first 6 months we have to apply the existing rates. Subsequent 6 months we have to apply the newly introducing rate. That is how we have to do. First 6 months the existing rates, balance 6 months the new rates. Then from 22-23 onward we have to apply the new rates. Right. In this case, in the case of partnership, there's no change. At the same time, the gain and profit from conducting of betting and gaming, no change. And manufacture and sale or import and sale of liquor, tobacco, there's no change. All the other things, rates are going up. Right. Then charitable institution, no change. Then EPF, provident or pension termination funds, there will be no changes. Then in the case of remittance tax, no changes. It will continue to be taxed at 14%. Then ultimately the net result is all these concessionary tax rates of 10%, 14% or 18%. 10% is on capital gain. Will go up to 30%. Right. Now, what are the removal of tax exemption? That is also very much important for us to see. In this slide, I have included everything, and I will I will explain only the items what they have proposed to remove with effect from 1st October 2022. The real estate trust, investment trust. Now on that, when you sell some land and building to that, on that gain there's a tax exemption. They are proposing to remove that tax exemption. Anyway, at present this is not in operation. Then IT and enabled service to local market, at present it is exempted. In future it will be liable with effect from 1st April 2023, it will be liable. Then vocational educational institutions who are doubling their student base, at present there's 5-year tax exemption. They are proposing to remove that. Then gold, gem jewelry export and gem processing for export, at present there's a tax exemption. It will be removed with effect from 1st April 23. Then recycling of construction waste materials, at present there's a 10-year tax exemption. It will be abolished with effect from 1st April 2023. This is after recycling and using. Then business commence after successful vocational education for the individuals. There's a 5-year tax exemption that will be abolished. Then boat and ship manufacturing by resident people, there's 7-year tax exemption that will be abolished. Then solar and wind power projects not less than 100 megawatts, there's an exemption of 7 years that will be abolished. Then construct communication towers and installing of appliances and giving the services, there's a 5-year tax holiday that will be removed. Then letting out of bonded warehouses for offshore businesses, there's a tax exemption that will be abolished. Now, to manage time, we will move to the withholding tax. Not like other things, the withholding tax, you can't backdate, because withholding tax is to be deducted at the time of making a payment. Now on remuneration, the APIT, at present the APIT is there, but on resident people, APIT is not mandatory. Now they are proposing to make the APIT mandatory for all employees, that means resident as well as non-resident. Then anybody who is receiving more than 100,000 rupees remuneration per month will be liable to APIT on mandatory basis. As I mentioned earlier, the dividends, they are reintroducing the withholding tax, but at the rate of 15%, which is mandatory as a final tax. Then interest, they are reintroducing a withholding tax 5%, but not as a final tax, not even on an individuals. It is not a final tax. Then other payment, the withholding tax will be 14%. Then rent in excess of 100,000 rupees per month. If the rent amount is exceeding 100,000 rupees per month, the 10% withholding tax is there on the entire amount. Suppose the amount is 99,000, no withholding tax. Suppose the amount is 101,000, you have to pay 10% on 101,000 entire thing. Then non-resident service fee and insurance premium, withholding tax of 14% on payment to be deducted. Then all other service fees in excess of 100,000 to resident, there will be 5% withholding tax on the entire amount. No sooner it goes up to 100,000, beyond 100,000, on the entire amount we have to pay. Then we'll talk little bit about the tax administration related things. Now this estimates, now as per the tax law under section 92, we are supposed to file a estimated tax return on or before 15th of August of that year of assessment. Now this suppose you have you didn't file a tax return, estimated tax return. If you will not file the estimated tax return, or even you file the estimated tax return, you have estimated a lesser figure than last year, and if you were not in a position to prove why you have estimated a lesser figure, then in these two cases the assistant commissioner can make an assessment and order you to make that payment. Therefore, you have to be very careful. The other thing, earlier this section 92, the authority was, some authorities were with the Commissioner General. Now it has gone to a lower level officer. Now when we give these things to the lower level officers, out of these lower level officers, if there are any corrupted officers, they will make use of these things for their personal benefit. Therefore, we have to be very careful. Then, appealing time. Under the present law, we have to make an appeal against an assessment within 30 days. They are proposing to reduce it to 14 days. This is not an advisable thing. Then charging of penalty. Now, as per our law, if we have severe financial difficulties, we can request the Commissioner General to grant us a extended time period for making payment. But the Commissioner General is giving this extended time period subject to interest. For the delay, subject to interest. Now, in addition to the interest, with this amendment, they are proposing that even you have obtained the approval from the Commissioner General, you have to pay a penalty of 20%. Now, it is not fair. Why? Penalty should be charged if you violate something. There's a default. Now, it hasn't happened, but they are proposing that. Now, we'll see other amendments. The claiming of losses. Now, claiming of losses, business losses, as well as investment losses, and the loss claims setting off the capital gain, there are small changes. Those are also to be considered. Now I have given the details. Now with that, I think I have explained a summary of the amendment, the important amendment what they have proposed. Now as I mentioned, the public objection period, as per our constitution, once a bill is gazetted, after 7 days, the parliament can book that in the order paper. Once it is put into the order paper, within 7 days, if we are objecting, we have to object to the Supreme Court. 7 days, that is under section 121 of the Constitution, that is a Constitution number 121, within 7 days of publishing the order paper, we have to appeal to the Supreme Court. Accordingly, I'm sure today, the 19th, they publish it. I'm sure that there will be a lot of people who are objecting this unfair increase of or changes of taxes. Right. If it goes to the Supreme Court, then Supreme Court has to give their determination within 21 days. Then once the determination is received by the Speaker of the Parliament, they can change those proposed, they can incorporate changes based on those proposals, then pass the act in the Parliament subject to those amendments as well as committee level, parliamentary committee level amendments. Yeah, with that, I would like to thank you for following this video clip. Thank you very much. We will meet you again once the act is passed in the parliament. Okay, thank you.